$4 billion down to $39 million. I still can't process that Allbirds valuation drop.
It's just gravity, Nate. You can't pay tech multiples for a wool shoe.
Hey, mine are incredibly comfortable, but fine. The actual giant today is a $29.1 billion spice rack.
McCormick's swallowing Unilever's food business.
Unilever walks away with $15.7 billion in cash and still keeps majority control? Come on.
I pulled the filings on that exact structure. We should probably unpack how they pulled that off. The rundown.
$39 million. That's what American Exchange Group is paying for Allbirds.
I actually gasped when I saw the filing.
Remember the IPO? 2021, they were valued at $4 billion. $4 billion for wool sneakers that get soggy in the rain.
It's a 99% value destruction. Literally. I checked the math twice. But hey, at least the bankers got paid on the way up.
We always do. Speaking of paying up, Big Pharma is completely off the leash this week. Biogen just dropped $5.6 billion in cash for Apellis.
Straight cash. They want that rare disease and immunology pipeline, and they want it yesterday.
And Eli Lilly is chasing right behind them, snapping up Centessa for up to $47 a share. It feels like desperation. These giants have empty pipelines, and they're just panic buying whatever biotech is left on the shelf.
Oh, come on, Nate. That's such a lazy banker take. It's not panic buying. It's a highly targeted land grab.
$47 a share is a premium that screams panic.
No, it screams improved financing conditions. Borrowing is getting easier, and they're deploying capital before the sudden surge in European megadeals completely crowds out the market.
Fine, but you know what else is driving the rebound? The absolute obsession with AI.
Please don't tell me you're calling the Primaris deal an AI play.
I am absolutely calling it an AI play. Primaris Services is buying Pinecrest Electric for $422 million in cash. Why? Data centers. You need power for the servers. You need servers for the AI. Everything is an AI deal if you squint hard enough.
You're exhausting. I suppose Playlist merging its ClassPass and mind-body brands with EGWAM is also an AI deal?
Smart fitness tech, Maya. The treadmills are learning.
RGP just put out a report warning about the quote-unquote human value gap in M&A, basically saying deal makers completely ignore culture and human systems. I feel like you're Exhibit A right now.
I'm a banker. I look at the math, and we need to look at the math on the real monster on the board today.
The $29.1 billion elephant in the room.
Exactly. McCormick and Unilever are cooking up an absolute flavor juggernaut. Unilever walking away with $15.7 billion in cash while keeping a 55% majority stake is fascinating. The big one. $29.1 billion for spices and mayonnaise. I just need a minute to process that number.
It is a massive number. McCormick combining with Unilever's food business creates a $20 billion revenue giant. But Nate, look at the structure here. This is not a simple buyout.
Right, it is a carve-out on steroids.
Exactly. Unilever walks away with $15.7 billion in cash, but their shareholders also retain a 55.1% majority stake in this new entity. So, who exactly is acquiring whom here?
Oh, McCormick is the one driving the bus. They want to own the center of the grocery store. You walk down the aisle, it is all them. Hellmann's, Knorr, French's, Mustard. They are building a flavor monopoly.
A slow growth monopoly. I read the footnotes on the historical revenue for these Unilever brands. Unilever has been trying to figure out what to do with this foods division for years because it drags down their high-margin beauty business. McCormick is basically paying a premium to bail them out.
Bailing them out? Oh, come on. McCormick is buying absolute scale. In this retail environment, if you do not have supreme leverage over Walmart and Kroger, you get crushed on shelf space. This gives them pricing power. You cannot negotiate with a supplier that owns half your pantry.
I disagree. I think McCormick just bought themselves a massive integration nightmare. There was a research report from RGP out this week talking about the human value gap in M&A. They emphasize that underinvesting in cultural integration is the primary hurdle to deal success. You are merging a Baltimore spice company with a massive European conglomerate's neglected leftovers.
The neglected leftovers generate billions in free cash flow, Maya. As a former banker, I look at that cash flow and I see a beautiful safety net.
But how do you actually merge those operating cultures? Do we really need Old Bay flavored Marmite?
Honestly, yes, I would buy that immediately. Put it on a bagel.
You are disgusting, and you are ignoring the debt load required to fund $15.7 billion in cash.
I am looking at the strategic narrative. Unilever gets the cash to go buy more fancy skincare startups, which is what Wall Street actually wants them to do. McCormick gets to be the undisputed king of condiments. It is a win-win.
I will believe it when I see the first combined earnings call. I want to see the margin compression. Unilever shareholders keeping 55% tells me Unilever did not want to completely let go of the dividend cash cow, but they wanted someone else to do the dirty work of running it. They get the upside without the operational headache.
Spoken like a true cynic. I still think it is a brilliant defensive play by McCormick. They saw the board shifting and they made a $29 billion move.
We will see how the bond market prices that debt. But if you want to talk about companies that completely lost their pricing power, we need to talk about Wool Sneakers.
Oh man, from a $4 billion IPO to selling for absolute couch change. Voices. I'm looking at this new RGP research report, and they're sounding the alarm on what they call the human value gap in M&A. They claim the primary hurdle to deal success is underinvesting in cultural integration.
Oh, please. Cultural integration is just the excuse management teams use when they realize they massively overpaid.
You really don't think culture kills deals?
I think bad math kills deals, Nate. Show me a failed merger, and I'll show you a spreadsheet where someone assumed 40% cost synergies that never actually existed.
Okay, but look at the gossip on The Wire today. Allbirds officially threw in the towel. American Exchange Group is buying them for $39 million.
Wait, really? 39 million? With an M?
With an M down from a $4 billion valuation at their 2021 IPO, it's a staggering fall from grace. You can't tell me human decisions didn't ruin that value.
That isn't a cultural failure. That's just selling wool shoes that fall apart in the rain. The unit economics were a disaster from day one. I read those original filings.
Fair enough. But the broader analyst consensus is still pushing a massive rebound narrative for Q1. They're saying improved financing and the AI arms race are saving the market.
The AI narrative is so overplayed. Not everything is a server farm. Look at the actual headlines today. Biogen is buying Apellis for $5.6 billion in cash. Eli Lilly is buying Centessa for up to $47 a share. That's classic, old school pharma buying rare disease pipelines. No algorithms required.
True, but the financing conditions have definitely improved to make those cash deals happen. Though honestly, the sector I'm watching closest right now isn't tech or pharma.
Let me guess. You're looking at oil.
Always, Middle East tensions are completely altering the valuation math for energy and infra, and we need to talk about how that sets up the board for tomorrow. Spill the tea. $4 billion to $39 million. I feel like I need to say that again just to let the sheer gravity of that wealth destruction really sink in.
It's essentially a 99% discount. American Exchange Group just picked up Allbirds for the price of a decent commercial plaza in New Jersey. $39 million.
Remember 2021? You couldn't walk into a Midtown pitch meeting or a Sand Hill Road coffee shop without tripping over a sea of gray wool sneakers. It was the official footwear of zero interest rate phenomena.
I'll actually defend the original shoe. The wool runners were incredibly comfortable. The problem wasn't the product, Nate. It was the absolute delusion that a single sustainable shoe design made you a tech platform deserving a $4 billion valuation.
Oh, come on, the product was definitely part of the problem. Once they got wet, they smelled like a petting zoo. But yes, my favorite banker math is taking a niche apparel brand, calling it direct-to-consumer tech, and slapping a 50x multiple on it.
I was reading through the footnotes of their last few quarterlies before this buyout hit. They tried to expand into activewear, running shoes, expensive brick-and-mortar leases. They completely ignored the unit economics. It perfectly highlights what that new RGP research report was warning dealmakers about this morning.
The Human Value Gap report?
Exactly. Underinvesting in cultural integration and losing your core identity. Allbirds lost their culture trying to scale like software. Now American Exchange Group is just going to strip it down and license the logo.
You'll see those wool runners in the bargain bins by Thanksgiving. It's brutal.
It really is. But speaking of massive cultural integrations and changing identities, we need to talk about what's happening in the grocery aisle right now.
Are we talking about the $29 billion elephant in the pantry?
We are. McCormick is combining with Unilever's food business, and the cash and stock structure they used to get this done is absolutely fascinating. Tomorrow's radar.
I'm telling you, every infrastructure deck getting pitched tomorrow morning has a new slide on Middle East oil spikes. The valuation math is changing in real time.
Oh, come on. Oil spikes are temporary. If you're rewriting a 10-year model based on a 2-week headline, you're doing it wrong.
Spoken like someone who hasn't tried to syndicate a loan lately.
Keep your eyes on Europe instead. We saw a massive mega deal surge close out Q1. I'm expecting a wave of follow-on filings tomorrow morning.
I'm also reading this new RGP report warning about the, quote, human value gap. They say dealmakers ignore cultural integration and ruin deals.
Shocking. Bankers ignoring human emotions? Stop the presses.
I feel attacked, but look at Allbirds. $4 billion at IPO down to a $39 million buyout today.
$39 million. You can barely buy a Manhattan penthouse for what American Exchange Group just paid for the entire company. We'll see if McCormick avoids that same fate with their $29 billion Unilever feast. Catch you tomorrow.